Test for the understatement. What does it mean? Test for the understatement. Understatement means that auditor is casting a doubt that the accounting records are incomplete, that is understated, right? A balance will be understated if items that should be included are not included. That is, balance is not complete. So here auditor is having a risk that records are incomplete, or else you can say that auditor is thinking that certain entries are omitted. Certain entries are omitted. This is basically the risk. This is the risk in the auditor's mind, right? So this is the testing for understatement. Now let's say, for example, I am giving you the information that I have purchased 10 products. So when there is a payable, purchase and payable, you are going to test whether all 10 products, the records are included here. So you are going to carry the risk in your mind that Mr. Hanif might be omitted some entries. And so called the test for the understatement, whether Haris has skipped any entry. So you are going to test it. An item which has been included is recorded at an amount lower than it should be. The amount is misstated. So a balance is understated if this first line is representing not recorded at all, that is omitted, and this is saying that less amount is recorded. Let's say it should be $500. I have recorded all these 10 products, but I have included $400. So obviously the accounts are understated, right? So what is the bottom line point? The bottom line point here is that in the first one, not recorded at all. Secondly, recorded at lower amount. Recorded at lower amount. So both these are called the understated, right? So you need to pause this video and read it again. Okay, I am now well assuming that you have paused and read this information, right? Now let's move on. Testing for understatement. Test the assertion. Just a minute. It is recorded at lower amount. I should write it over here. Recorded at lower amount. Now, testing for understatement. If you are going to apply the procedures, whether the accounting records are understated, it means that assertion of completeness, accuracy, and valuation. So you are highlighting these assertions, and obviously completeness, accuracy, and valuations, these all are interrelated. They depends on each other. So when you're going to test for the understatement, you are actually testing the assertions of completeness, accuracy, and valuations, right? Now pause this video and read it. Okay, I am now well assuming that you have read this information. Now let's move on. Test for the overstatement. What is overstatement? What is overstatement? What is overstatement? A balance will be overstated if items are included that should not be included. That means you have recorded twice. This is only one product I have purchased, but I have recorded 2 units. It should be recorded only one item, but I have recorded twice items which are included that should not be included. So simply we can write that might be recorded twice. might be recorded twice. Might be recorded twice by error, or it may be possible that certain entries are fictitious that should not be included, but they are included. So that means overstatement, fictitious entries. Number two, an item which has been included is recorded at an amount higher than it should be. That is, the amount is misstated. That means recorded at higher value. That is recorded at higher value. For example, I have purchased this one product at $500. I have recorded one product, but I have included $600. So that's old statement. So accounts are overstated, right? The accounts are overstated. Now let's move on. That if you are testing, so it is very much important. It is very much important to know that whatever the procedures you are applying, whatever the test you are applying, which assertion it is being hit. Testing for overstatement, the assertion of existence, obviously, if it is fictitious, recorded twice, so that means it's existed or not. Rights and obligations. For example, I do not carry the right of the other product, but I have recorded it. So I do not have the right, but I have recorded it. Misstatements. Occurrence, because the transaction were not occurred, but I have recorded this. And accuracy and valuations. Obviously, accuracy and valuations, it is at the higher amount. So when you are testing for the overstatement, these assertions are being affected. So it is very much important to know that whatever the procedures you are applying for the overstatement or the understatement, which assertions it is related to, right? So this lecture is still here. Now see you in the next lecture.